Hi guys, so we'll quickly go through the moving average what it means. So let's just jump right into it. So when it comes to moving averages, there's multiple moving averages. You can use the 20, you can use the 50, the 100, 200. I don't really need that much. So what I use is I use the 20, I use the 50, and I use the 200. So 20 MA or 20 moving average is the shorter term moving average. 50 is the medium term and 200 is the longer term moving average. So one of the main things is it helps it helps us smoothen out the price changes. So what it usually shows is the average price of a range. So if you take the 20 MA, it shows the average price of the last 20 candles. So that's all it does. It just shows you the average so that it's a bit more clear. So if we take any point in this chart over here, let's say this at this point, what that red line, the red line is the 20 MA. The red line shows that the average price of the last 20 candles. So of the last 20 candles, this was the average. And with the 50, it's literally the same story. So what it shows is over here, it shows the average price of the last 50 candles. Instead of the 20 with the 20 MA, it shows the 50 with the 50 MA. And once again, same thing with the 200. What that shows is it shows the average price of the last 200 candles. So it's probably, if you take here, this is somewhere around like 200 candles. That's what this point means. So at this point of that price, which is 710, that is the average price of the last 20 of the last 200 candles. It is as simple as that. It just shows you the average of the last whatever amount of candles depending on your moving average. So if it's the last 20, that's the 20 MA. If it's the last 50, that's the 50 MA. And if it's the last 200, that's the 200 MA. And there's two types of moving averages. There's SMA, which is the simple moving average, and there's the EMA, which is the exponential moving average. There is a bit of a difference in how it is calculated, but you don't really need to find out what's better. You can just use the EMA or the SMA. It's basically the same. It's just the moving average. So what we can do is the moving averages can act as moving support levels and resistance levels. So I'll just go through a quick example. In the shorter term time frame, which is the 5 minute or the 1 minute, we can clearly see that the red one, which is the 20 MA, the red line has been acting as support. So we can see that price made a higher high, made a higher low onto that 20 MA over here, price rallied up, pushed back down to that 20 MA, and when it reached that 20 MA, it acted as a support level, pushed up, once again tested the 20 MA, acted as a level of support, pushed up, once again it acted as a level of support. So that's how the 20 MA can act as a support level. I would usually use the 20 MA in a shorter term time frame, which is either the 1 minute or the 5 minute, and you can even use it on the 1 hour. It's just completely up to you. So another example would be here we're using 200 MA. So when the price is above the 200 moving average, it usually indicates a bullish trend. So that means the buyers are in control. So what we can do here is, let's say the price broke out of the 200 MA, which is over here. What we can do is we can take a trade there if you want to, and you can quit when the price crosses below the 200 MA. In that case, you can make a substantial return. So let me just show you. Let's say we entered here and we exit here where it crossed down. That's a 88% gain, which is absolutely amazing. Let's just take another example. 200 MA crossed over here and it crossed below here. So let's say that's another 29%. And once again, it crossed above over here and then crossed below over here. That's 161%, which is amazing. So one trading strategy that you can have is once it crosses above the 200 MA, it usually indicates a bullish trend, especially when we're using a long-term time frame like the day chart or the 4-hour chart. So the 200 MA, that's for the long term. That's something that I use for the long term. And on the flip side, it can also act as a moving resistance level. So we can clearly see here on the 1 hour chart, The 200 MA, which is the white line, the 200 MA is a white line. It has basically reached that, or almost reached that, sold off, reached that, broken over, and then sold off, reached that, sold off. So one of the main things is we clearly know that we are in a bearish environment or a recessionary environment, which means the sellers are stronger. And every time it reaches the 200 MA, we know that that can act as a potential level of resistance, and that's where we can short, because the 200 MA in this case is acting as a moving resistance level. So the moving average, the shorter term moving average, can even act as a resistance. All the moving averages can act as a potential moving support level or a potential resistance level. So it basically moving means we can clearly see that the red line is the 20 MA, it's moving downwards, and it is acting as resistance because we can see that it sold off, buyer stepped in, reached that 20 MA over here. That's where the seller stepped in because that was treated as a moving resistance, and when it basically reached that level, seller stepped in, pushed the price all the way down until it tested it somewhere over here again, and then they did proceed to sell it off until it broke this level, and the sellers and the buyers took control again. So it's as simple as that. The key thing that you have to remember is it shows the trend. It basically indicates the trend. So especially the 200 MA, it indicates the trend. If the price is below the 200 MA, it is usually a bearish trend, which is where the sellers are in control. So we can clearly see prices below the 200 MA, it has been selling off, and here over here we can see that price is above the 200 MA, which means that it is a bullish trend. So treat it as you see it. It's just very simple to understand and it's very easy to use. The 20 MA, 50 MA, and the 200 MA, it can be very advantageous. What I usually use is just the 20 and the 200, 20 and 20 MA for the very short term levels of basically moving support and resistance, and the 200 MA to define the trend, because we can clearly see here price is below the 200 MA over here, and it's been selling off. So it's as simple as that. And one of the easiest ways that you can make money is when the macro environment is good, where let's say the Fed is pumping money into markets and the price crosses the 200 MA. That is usually a bullish indicator. That's where you can go along, make some money for yourself. So that's the basics of moving averages. We've gone through it rather simply because we don't really have to go into the details and break everything down. We just have to keep trading simple. It's just a very, very simple thing that people do, but a lot of YouTubers, a lot of people complicate it way too much. So just keep trading simple, keep your fundamentals very strong, and yeah, you can be profitable. And like and subscribe. I will see you on the next one. Thank you.